Okay, let's get started. Hello, everyone. Welcome to the FansUnite Q4 and 2022 year-end earnings call. My name is Prit Singh, and I will be the moderator for today's call. Before we begin, I would like to go over the legal disclaimers. We will pause here for a minute so our viewers can review. On today's call, we will be covering FansUnite's key fiscal 2022 financial and operational highlights, as well as its growth outlook for the remainder of 2023. After the presentation component of the webinar, we will be hosting a Q&A session at the end of the webinar. If you have any questions during the webinar, feel free to send them in using the Zoom Q&A function at the bottom of your screen. If you're calling in to listen to the webinar today, you can email your questions directly to ir@fansunite.com. Again, that's ir@fansunite.com. We will address these questions during the Q&A session. Our presenters today will be the CEO of FansUnite, Scott Burton, and CFO of FansUnite, Graham Moore. I will now turn the conference over to Graham Moore, CFO of FansUnite, to discuss the company's full year and Q4 2022 financial results.
Thank you, Prit. Just so everyone knows how this will be structured, I'm going to first speak to the statement of profit and loss for the year ended December 31st, 2022. All figures that I reference should be interpreted as for the year ended. I will then move on to the balance sheet, as we had some significant changes there that I would like to touch on. The major news for us this year is our revenue growth. In 2022, our revenue increased by 387% to $27.3 million, up from $5.6 million in 2021. The majority of our revenue came from American Affiliate, which we owned for a full calendar year as compared to approximately 6 weeks of ownership in 2021. American Affiliate, or MF as we call it, delivers strong operational results, capitalizing on major U.S. sporting events, including the Super Bowl, NCAA March Madness basketball tournament, and other events. They also participated in the launch of regulated sports betting in New York and other states and expanded their presence in existing markets that they operated in prior to 2021. In addition to American Affiliate, our revenue from McBookie increased to $3.76 million in 2022 as compared to $2.81 million over the same period in 2021. This was primarily due to strong performance from the casino and an active sports betting environment surrounding the FIFA World Cup in Q4. The remaining $520,000 of revenue was generated from the recently launched Chameleon white labels, which marked the commercialization of the company's B2B operations. FansUnite had a cost of revenue of $12.45 million for 2022 as compared to $2.72 million in 2021. Now, these numbers are a little misleading given the significant increase in revenue that I just mentioned, so I would like to draw your attention to the gross margin. The gross margin in 2022 was 54% as compared to 51% in 2021. The improved overall gross margin percentage and dollars primarily relates to the increase in activity related to American Affiliate, which is both our highest margin as well as our highest volume business. Our net loss for the year was $61.27 million as compared to $17.05 million in 2021. And the increased loss was due in large part to the goodwill and intangible impairments and was offset by the gain on revaluation of our contingent liability. Now, I will talk to the revaluation and impairment in the balance sheet section, but I would like to bring everyone's attention to the fact that outside of those two items, we had over $38.5 million in non-cash expenses included in that $61 million loss figure, as compared to only $7.6 million in non-cash expenses in 2021. The nature of our company is that we were focused on acquisitions and growth until the end of 2021. And we used a combination of cash and stock to fund those acquisitions. Obviously, there's a price there, and we see that in the share-based payments of $6.7 million in 2022 as compared to $2.25 in 2021, as well as the accretion on liabilities, which is essentially adjusting the present values of our contingent consideration, a very accounting-heavy entry, of $10.6 million, which compared to $1.4 million in 2021. Operationally, the main operational expense was salaries and wages, which increased to $14.4 million from $4.4 million in 2021, which was a result of increase in headcount. The company increased our average headcount to 95 people for the 2022 year, as compared to 34 in 2021. The majority of new hires were attributable to the American Affiliate business, as well as our B2B segment. General and administrative costs were our second largest G&A expense, which increased to $4.62 million, up from $2.05 million. Again, due to the acquisition of American Affiliate, as well as ancillary costs associated with the increased headcount. In the second half of the year, as Scott will mention, we shifted our focus from growth and acquisitions to streamlining costs, and we took a hard look at how do we become cash flow positive as a company. To that end, I'm happy to note that our professional fees decreased from $3.5 million to $2.8 million, and our sales and marketing decreased from $3 million to $1.6 million. With no acquisitions or equity raises, and the company moving from generating brand awareness to becoming an established company, I'm happy to see that we have seen reductions in these expenses, and we will continue to pursue further reductions in 2023. Okay, now for the balance sheet. Total assets decreased to $77.5 million on December 31st, 2022, down from $177.9 million on December 31st, 2021. During the year, we amortized intangible assets by $21 million and recognized an impairment loss on goodwill and intangibles of $71.7 million. This was further amplified by the settlement of net working capital adjustments owing to the vendors of American Affiliate. Now, let me talk to that impairment for just a second here. The IFRS rules, and we, of course, as a company report under IFRS, are very clear that you cannot ignore market capitalization when looking at the book value of your assets. In the current economic environment, that has a significant impact on all companies in our industry. GAN Limited, who reported their earnings yesterday, as well as Enthusiastic Gaming, to name two, have both recognized impairment in the current year, and both noted the market capitalization to book value discrepancy as a key driver there. Our share price was 6.5 cents on December 31st, 2022, as compared to 53 cents when we purchased AMAF. We do believe in AMAF and the future opportunities that it presents for us, particularly if or when states like California, Texas, and Florida legalize online sports betting. However, as I mentioned, we could not ignore the fact that our market cap was out of sync with our book values, and thus we were forced to recognize an impairment loss. I would also like to note here that $67.6 million of that impairment related to goodwill and not to specific assets. The only assets that we looked at and identified a need to impair during the year were the BetPrep asset, which was sold in January 2023, and our RNG Games division, which we put on pause in Q3. Total liabilities of $34.47 million as of December 31st, 2022 is a significant reduction from $94.6 million in 2021. Liabilities were largely comprised of deferred and contingent consideration of $20.8 million associated with the acquisition of American Affiliate, as compared to $87.2 million for that same line item in 2021. The decrease in contingent consideration is due to a restructure of the obligation that was due to the former shareholders of American Affiliate. As we noted in our Q3 earnings call, we restructured the earnout to reduce our EBITDA multiple from 2.75 down to 1, and focused on the live activation side of the business, our betting heroes. Related to the restructuring of the earnout obligation, the company also added $8.23 million in bank indebtedness. As of December 31st, 2022, FansUnite had $2.91 million in cash on hand, which decreased by $11.06 million since December 31st, 2021. The change in cash is largely due to a number of items. First of all, the payments of the remaining working capital amount. As I mentioned, that was due to the vendors of American Affiliate and settled in January 2022, as well as standard earnout payments and the earnout buyout payment paid to the vendors of American Affiliate in Q3. Also, salary expenses that were associated with the previously mentioned rise in headcount. And those two things were offset by the proceeds from the bank indebtedness, as well as cash flow associated with our affiliate segment. For the year ended December 31st, 2022, the company had increased levels of spending on our technology as we prepared for the launch of prospective white labels on Chameleon. As part of our continued mandate to maximize shareholder value, management continues to evaluate all areas of the business and focus on high growth and strong margin arms of the company. That's all for the financial update on FansUnite, and now I'll turn over the call to Scott Burton, our CEO.
Thanks, Greg. I will touch on the operational side of the business for 2022, which is, Greg mentioned a lot of the things. It was quite a busy year for us. Throughout 2022, we focused most of the back half on reducing costs while growing revenue. The main areas of growth came through the acquisition of American Affiliate in late 2021, as well as seeing a growth in the revenue of our McBookie site. We also saw the beginning of the recurring revenue on the B2B platform when we launched Betr in January and Dragon Bet in the fourth quarter of 2022. And then Betting Hero, we saw some good expansion there. It grew its US footprint by entering into newly opened states. It further cemented its position as the largest and premier live activation company in North America throughout 2022. The B2C site, which is McBookie, operates in the UK and focused on the Scottish market. It saw substantial revenue growth in 2022 when compared to 2021. It was a World Cup year, which always helps when a large part of their sports betting activity is around football or soccer, as we would call it here in North America. So we were happy to see them reach an all-time record revenue for that site. We've seen that growth year on year since the acquisition in 2020. B2B operations, we continue to develop and commercialize the Chameleon platform. April 19th, we announced that we had entered into a memorandum of understanding for a licensing agreement with Lavelle Brothers Limited to launch their new online sportsbook, Dragon Bet. Later after that, we signed a definitive agreement in July of 2022. They soft launched the site late September of 2022, and then really started to push in October. And they've exceeded all of our expectations, I would say, so far. So we're very happy with that site, very happy with the Lavelle brothers and their operating capabilities. And they're approaching 50 million in turnover to date. So that's since October of 2022. And that success and the site being live in the UK has generated a whole new pipeline of potential business for us in the platform in that market. So the B2B contracted revenue was additionally strengthened when we signed an agreement to provide our player account management system, also known as a PAM, to Betr Holdings in August of 2022. Betr Holdings operates the US brand called Betr, and they successfully launched their micro betting site using our PAM on January 1st, 2023 in Ohio. We're building on that successful launch with them. So with our first US partnership, and you'll see us be getting additional licenses in the US state by state in the coming weeks and months. In the year ended December 31st of 2022, our B2B revenue was $520,000. Prior to that, the first 9 months of the year, it was $138,000. Additional licenses, as mentioned, we're going to go after more in the US, and we're in the process of doing that now. But we also received an AGCO license in the first quarter of 2022. That's a gaming-related supplier license from the Alcohol and Gaming Commission of Ontario. So our platform is now a fully registered platform for sports betting and internet gaming in Ontario. That was effective in April of 2022, and we're still in discussions with some potential first partners to go live in Ontario. We also did an uplisting, so we previously traded on the Canadian Stock Exchange, and we successfully completed that uplist to the TSX and commenced trading on the Toronto Stock Exchange on July 5th, 2022. It was a good positive step for the company as we look to continue to introduce larger investment pools to the FansUnite story. Graham touched on the debt and restructure. We did the AMF acquisition. It was a much different time in the market, and we looked at how things were going in the market and decided we needed to restructure that earnout obligation. On September 19th, we announced that we'd entered into a definitive agreement with Centurion Financial Trust for the senior term loan of up to $12.35 million. And the whole purpose of that loan was to restructure earnout obligations owed to some of the people under the definitive agreement with AMF in November 2021. The restructuring of that earnout obligation is expected to reduce future shareholder dilution and it will allow us to retain more cash in the company going forward, which both are positive things for us, the business and the shareholders. In Q4 of 2022, we received our GLI 33 event wagering system certification. That was from GLI, or Gaming Laboratories International, for the Chameleon iGaming platform that we've developed. That standard, the GLI 33 standard, puts our platform through some pretty rigorous technical testing for sports and event wagering. As a result of that certification, we can now meet compliance requirements for most US regulators, and it provides some good credibility for the company and the platform as a technology supplier ready to go into the US sports betting industry. The next license that we added was for Ohio, and that was in the fourth quarter of 2022. We received that license through the Ohio Casino Control Commission, and it gave us a sports gaming supplier license for that state. Legal sports betting opened in Ohio on January 1st, 2023. It's expected to generate a sports betting handle of about 8.8 billion US in the first calendar year. It was a lot of work for us to get ready in time and to meet the deadlines and get launched on January 1st, but our team was able to do that in partnership with Betr. So Betr launched their first site in the US in Ohio on January 1st, 2023, using our PAM. Ohio is the first of a number of US licenses that we intend to obtain, and we will be moving alongside our partners' planned rollout for the US state by state. Moving to the affiliate operations, and specifically Betting Hero we'll talk about, as it was the largest part of the revenue there. So that was a new line of business that we acquired November 2021, and it contributed 23 million to the results of 2022. Betting Hero led the way. They had very strong operational results and record-setting activations, primarily led by the major US events is where we see the big jumps for them. The two big ones being the Super Bowl and then March Madness basketball tournament, which we just held now. They continue to expand their footprint in North America, which they will do quite aggressively. So they obtained gaming supplier licenses in Maryland, West Virginia, and then in Canada, they got their license for Ontario. Their existing relationships that they already have with their partners in other states helps them launch on day one. Typically in most states, they have the ability to be live day one with existing partners. So it's a big advantage that they have. And they only get that through the scale and the footprint that they have throughout the US. As part of their strategy to diversify revenue streams and smooth out the seasonality of the betting calendar, they've started to grow other lines of their business. Most notably is their research division and their Hero Hotline. In August 2022, an example of the business that the research side is doing is they signed a deal with Bankroll, a group out of Philadelphia, Pennsylvania. It's a sports betting bar, and as part of the strategic partnership that they forged, Betting Hero helped to build out their sports betting concierge team, focusing that on VIP customer engagement, customer acquisition, and then building relationships with gambling and sports betting companies that they can help facilitate through their existing relationships. We expect that part of the Betting Hero business to continue to grow and could be a major revenue line for them in the coming years. What we call the B2C, the direct-to-consumer side, McBookie is our site that we operate, and their revenues increased at the year ended December 31st as a result of their marketing efforts, leading to an increase of customers and activity on the platform. And then it's always helped by having a major sporting event like the World Cup, which comes around every 4 years. Approximately 3.76 million of revenue this year is attributable to McBookie, and that was compared to 2.81 million over the same period in 2021. Excuse me. So this is the portfolio now of revenue generating business that we're focused on, and we've talked a lot about how we're leaning in heavily now into the revenue generating companies, reducing costs and moving towards cash flow positive as quickly as possible. So looking forward and past 2022, we'll continue on with the work that we started in 2022, which is assess and streamline business units to keep in line with the goal of profitability without impacting growth of any of our revenue generating segments, which we were able to do. And as Chameleon moves out of its pre-revenue stage, we expect continued customer acquisition for that platform and more revenue growth like we saw at the fourth quarter of 2022. And then very focused on growing the cash flowing business segments like Betting Hero. Betting Hero entered 6 regions in 2022. They're already into 2 new states this year. And as sports betting and iGaming become legalized in more North American states, we will continue that aggressive expansion plan into the new markets and continue to lead the way in live activation and the research side of the business. So getting to the other sides of that business, we're talking about the research and hotline. That's actually, I'll cover that more a little later. I think we have some questions on that, so we'll dive in deeper into what those 2 are doing. But in keeping in line with our profitability plans, we've continued to conduct strategic reviews of the certain business segments to identify opportunities for operational and financial efficiency. This review led to further asset moves, such as the sale of wagers.com. And in 2023, we announced the sale of the betting analytics brand BetPrep. To ensure we had sufficient runway this year to execute on the plans, we took some additional capital from the recent financing that was led by TechCorp Capital. TechCorp is an investment firm run by a group of very well-known gaming executives. They specifically advise and invest in public and private companies within the gaming industry. Them coming in, I think, helps reinforce our belief that we're strategically heading in the right direction and with significant upside potential with the current valuation. So the expansion of regulated markets in North America, we're excited to continue to build on the momentum that we've got going now. We'll do that both in current jurisdictions we're in, current business lines, but then also expanding into new markets as they open up. So overall, I would say 2022 is a challenging year for not just our company, but the wider markets in general. We're confident that we made very important changes to the company that puts us on a path to profitability this year. I think we'll see a big transformation this year as we move away from really the integration of the large acquisition we did, streamline the business, reducing costs, and getting ourselves to profitability by the end of 2023. So I think that's concludes the formal portion of the presentation. Probably get Prit to come back in and run us through the Q&A.
Yep, thanks, Scott. Thanks, Graham. So to our listeners, we'll move into the Q&A component of the earnings call today. If you do have any questions, you can please submit them to the Q&A function at the bottom of your screen. Alternatively, if you're calling in today, please email us at ir@fansunite.com, ir@fansunite.com. First question here. What are FansUnite's plans to accelerate its revenue growth and ultimately increase gross margins?
Yeah, I can take that one. I think the way Scott ended his presentation is kind of a good way to start there. Again, 2022 was all about what is working for us, right? Which lines of the business are contributing to revenue growth? And then if it's not contributing to revenue and gross margin growth, let's eliminate or reduce the parts of the business that don't align with that singular goal. I think we've done a really good job there. I think the long-term assets that we held on to are directly aligned to that growth and have a lot of potential for growth. Obviously, American Affiliate, not just the live activation, the other 2 areas that they're pursuing have a lot of potential. And as Scott mentioned, the B2B business as well, with 138,000 in revenue in the first 9 months and 520,000 for the year end. A quick little back of the napkin math shows that we did about 380,000 in revenue in Q4 alone. A lot of that was tied to the growth and the setup of Better. So not necessarily something, I wouldn't multiply that by 4 if anyone's doing their own math, but definitely something that we'll see a lot of growth in for the 4 quarters for 2023. We also had, one quarter with Better and not even a quarter with Better and 1 quarter with DragonBet. And finally, McBookie. Again, when we bought McBookie for $2.2 million in 2020, they had done just over $700,000 in revenue in 2019. We had the goal to double their revenue in 2020. Obviously, 2020 was the pandemic year. So when we bought them in March 2020 and sports shut down April 1st, we were not super confident in our ability to hit that goal, but we did. They grew from 700,000 to 1.9 million, then 2.8 million, and now 3.8 million. So every year I look at McBookie and I think, okay, maybe we're not going to grow as much as we did last year. And every year we continue to grow. So I think focusing on the 3 lines of business that we have is how we'll get there.
Thank you. Next question here. Can you please explain your net loss figure?
Yeah, it's a big number, right? I mean, if you just take a look at the income statement and you scroll there and you see that $61 million number, it's a little shocking. And I think we've tried to give some context to that number. Accounting doesn't always necessarily reflect operations. And I think that's a little bit of what we're seeing here this year. As I mentioned, we have $68 million in goodwill impairment, and that is largely tied to the market cap, discrepancy to the book value of assets. Again, very different market on December 31st, 2022 compared to December 31st, 2021. So that's a huge part. We did have $4 million of impairment of assets. I don't want to look like we're pretending it's all goodwill. That is still there. Again, those are related to the shutting down of the RNG games as well as the sale of the bet prep asset. We also had one-time expenses related to the debt financing. I think those 3 things, as well as a lot of share-based payments that were associated either with the restructuring of the earnout or continuing on from the MF acquisition. And so those things, I think, are the biggest players in that number being so much bigger than it was last year.
Okay, thank you. Next question. When does FansUnite expect to become profitable?
Yeah, our target is to be profitable by the end of 2023. I think that's a message that we've been repeating for the last few months, ever since we felt confident that we could achieve it. And we still feel confident that we can achieve it. We've taken a lot of steps to focus exclusively on the high margin revenue generating aspects of the business that are starting to show results. The lines of business that we were really excited about that just weren't getting there fast enough, we had to make the tough decision of how do we become profitable as a company? And the 3 assets that I think we're left with are the best ways to do that. Of course, we're battling the macroeconomic environment. We can't pretend we don't live in the world that we live in. So there's always things that can derail that. But I think one thing that Betting Hero has always done is we set goals and they hit those goals. And so as long as we keep doing that as a company, I'm confident we can be profitable by the end of 2023.
Thank you. On that note, can you elaborate as much as you can on the performance of DragonBet and Better in 2023?
Yeah, I'll jump in here. As I said, I think DragonBet's done extremely well. That was a brand that didn't exist before the launch. So a brand new brand. We really like the team behind it. They have a very good history in mainly horse racing in Wales. And they had some name recognition in the Lavelle name, not necessarily DragonBet. So that launch is done very well. As I mentioned, they're already approaching, might be over by now, but $50 million in turnover, which is quite a lot more than I expected in the first few months. And there's really no signs of them slowing at the moment. I think they're only going to continue to improve. Again, as a brand new brand with brand new online operators, there's so much, I think, low-hanging fruit that we've seen from the operations, both from our side in helping them and their side on the marketing efforts and acquisitions. So DragonBet's doing extremely well. Better had a great launch in January. So they launched, getting ready ahead of the Super Bowl. I think the Super Bowl showed us how much activity a micro betting site can generate. So we're happy to be part of that, and especially with a group that has the people involved that they do, and with their pretty good or pretty aggressive, I would say, expansion plans throughout the U.S. So excited to be a part of that with them and follow their path and get more licenses in the U.S., which is our plan. Those are underway right now. Can't speak to their numbers. That's something we're not able to speak to. But very happy with the first state and looking forward to the additional ones.
Thank you. As a reminder to our audience, if you have any questions, please do submit them to the Q&A function at the bottom of your screen. Alternatively, if you're calling in today, you can email us at ir@fansunite.com. Again, that's ir@fansunite.com. Next question. Can you elaborate a little bit of how much traction Betting Hero is getting in the Ontario market?
Yeah, I guess it's a bit of a complicated one in Ontario right now. So they're able to activate there, but we're not seeing actually any affiliate activity really in the Ontario marketplace. And that's for the main reason is that there's still some uncertainty and it's a bit of a gray area on affiliate operations in Ontario. And what I mean there is you can't incentivize in Ontario, which means you can't offer free spins, you can't offer free money. So everything you do to market has to be around the product. And if you go offside, you get in trouble. But it's not the affiliates who get in trouble, it's actually the operators. So if an operator does a contract with an affiliate and that affiliate does things that are not allowed or considered allowed by the AGCO, then it's the operator who gets fined. So what we're seeing right now is operators, I guess, a little too scared to start signing affiliate deals till some of that has worked out. And it's not necessarily black and white. So, excuse me, through our involvement with the CGA, primarily, I'm on the board there, and Jay from Betting Hero, we've involved in a bit of a working group around affiliates, working with the AGCO to try and sort of iron out those issues. So pretty confident that this year, they will be activating in Ontario, but right now everyone's sitting on the sidelines until there's a little more clarity around how affiliates can operate and how operators can get comfortable that they're not going to face massive fines because they can't necessarily control either digital or live activation teams that aren't part of their company.
Okay, thank you. This couple of questions were on the outlook. So can you tell us more about the acquisition of BetPrep by Stram Entertainment?
Yeah. So we've talked a lot about how we looked at all the lines of business and had to make some decisions on what to do going forward towards this profitability path. We really like the BetPrep technology. We like the founders. They're a really great group of guys. But we just looked at it, and within our sort of ecosystem, the path to profitability was going to be longer than I guess we could accept, and it was going to require additional investment in team and things to get it there, which in our efforts we just weren't going to be able to support. So we looked to, that gives us a few options where we could park it, we could shut it down, or we could see if there was a better home for BetPrep and the team. And we were very fortunate to find Stram and work with them. So Stram Entertainment, UK-based group that operates their main site is called Best Odds. They've done a very good job of developing that business and getting into the affiliate space. And when we looked at their assets, their team, and the direction they were heading, we saw a much clearer path for BetPrep to generate revenue quicker through some of the products that Stram has. So we made that deal to, I guess, sort of partner with Stram, but effectively they acquired it on a 3-year buyout with guaranteed monthly payments. But then we also participate in the upside on a revenue share basis. So I think it worked out well for everybody. The team gets keep going with that product. We immediately eliminated a big size burn from the company, a monthly burn. So that went away immediately. And then we still get payments over the next 3 years. So that's what we ended up deciding to do with that prep. And I think it was the best thing for the company, both sides.
Okay, thank you. Will you be doing a rollback or consolidation in the near term?
No, there's no plans. Hasn't been a discussion at all at the board level or the executive level. We have no intention right now of doing any uplistings on an additional exchange like the NASDAQ. So we don't see there's a need for a rollback or consolidation. We did take additional money, so we're capitalized and we're just focused on this profitability path.
Okay, and the next audience question rolls into that. So, on the additional money, what led Tech Corp Capital, in your opinion, to make a strategic investment in FansUnite?
Yeah, no, excited to have Tech Corp involved with the company and Matt Davey and his team. They've followed us for a number of years, probably since we went public. I mean, their whole business is investing in gaming companies, both public and private. They know our team a bit. They more so know the board. So in various previous roles of the people at Tech Corp or our board, they've worked with almost everybody on our board in some capacity or been involved through previous deals. So I think they have a high degree of respect for the board members we have. They've got to know the operational team, and they got to see the path we're on. And believed in it and believed that we're undervalued at this point. So they made the investment, and they're going to be a very close partner going forward. So I now have regular calls with different parts of their executive and management team to talk about strategy, to talk about opportunities, and to talk about basically just get a lot of feedback from them, from their experiences. They've run the biggest gambling companies in the world, and they've also got a lot of capital market experience. So I think going forward, we're going to see as much value in that partnership as I think they're going to see on the upside and the share price when they invested.
Okay, thank you. As a reminder to our audience, if you have any questions, please submit them in the Q&A function at the bottom of your screen. Alternatively, if you're calling in today, you can submit them directly to our email, ir@fansunite.com. That's ir@fansunite.com. Next question here on Better. Can you maybe elaborate a little bit on why you think Better decided to use Fans PAM as opposed to a competitor?
Yeah, I think people who are looking to move quickly on a flexible platform that can meet quite a variety of needs and incorporate many different third-party integrations, which a number of existing platforms aren't able to do at speed. They're a new group, they're a young group, they're aggressive, they want to move fast. And I think that was one of the big things. I mean, our teams have gotten to know each other well and work very closely, regular meetings, and that's helped over the period of time we worked with them. But I think a lot of that was the flexibility we've designed into the platform and really making it purpose-built to go into a market as fractioned as the US. So each state has very different responsible gaming rules, all the rules around who can be on the site, all the rules around how much betting, how much people can lose in a month, or different limits. We're built for that, and not everyone is. And then when they also know that if there's a third-party CRM or some other integration they want to use, we've never been prescriptive in what people can use on the platform. We don't like to make decisions for partners, whereas some of the other platforms have done that and I guess backed themselves into a corner on what their partners can use. we're really agnostic to everything in the third-party space. So that's being from CRM to KYC to geofencing. All of that can be customized to the partner at a state level. So when you're going into a market like the US, those are things that really need to be taken into consideration. And we're seeing that more and more. It was such a rush a few years ago to get into that space in the US that a lot of brands, I guess, sacrificed speed and flexibility of a platform in order to just get live with something. And now we're seeing a lot of those people reevaluate those decisions. And a lot of them will be coming up on the contract ending. So, it is a long sales cycle in this space, but typically deals are going to be 3 years. And as we're getting to 2023, I expect in the next year or two, a lot of those early movers are going to be reassessing their platforms. So it's a good opportunity for us.
Okay. Next audience question here. Are you aggressively pursuing B2B? Just expanding on your answer there.
Yeah, we've never had actually an issue on pipeline, and it's all been still inbound pipeline is requests coming in. So we're consistently doing demos, getting into NDAs with a number of groups, talking through commercials, but we're also really cognizant of the plans that are in front of us for the US expansion. So we're balancing that and really focusing in on a few areas we think we can execute well on and keeps the business fairly straightforward. So with what we've got going now, we'll have a lot of, I think, growth just on the existing deal we have going in the US. And then we've got a number of potential clients that have come to us in the UK now that we've seen DragonBet. So we are looking to add B2B partners. But we are being careful about who they are. We want to make sure now that we can support them well, but they fit into our plans with what we want to do in the US and then around the UK. So we don't have a business development team out there because I don't think we need it right now because of the amount of stuff coming at us. But we will be looking to add partners onto that this year. But I think we expect to see possibly more out of the growth from the existing partnerships, more so than brand new partners.
Thank you. Next question, and our last question. What are some catalysts investors can expect in the next 6 to 12 months?
So it'll be continuing on the path that we've started, and the first one being, I think you'll continue to see reduction in our operating costs or increases in the margin as we focus on streamlining existing operations. The 2021 acquisition, that was quite a big acquisition and a large company to incorporate into FansUnite, and it took time. We spent a lot of 2022 working on that, but we've started to see and we'll see more opportunities to bring down costs, and we already saw a margin increase in the last fiscal year. So that's something that we're going to continue on, and I think people will be able to see that in results. Revenue, so growth in revenue, especially from new lines of business from existing companies. So we look at Betting Hero, them adding the research arm and what they're calling the Hero Hotline, which is basically a VIP concierge service for operators. That'll be new revenue, which is great. Now that they're operating at scale on live activation, they can layer in these other services that will be high margin businesses, and they can offer them to existing customers. Additional state licenses, so you will see us putting in more applications. I think that process is going to be speeding up in the coming months. And then the main one that we're focused on, and I think will do the most for shareholder value. I think what's being recognized in the markets right now is not growth in the future. It's can you get profitable, and that's our goal, is to get to cash flow positive this year. So I think that will be a major turning point for the company. Thank you. I believe that's all the time we have. So
that will wrap up our Q4 and year-end 2022 FansUnite earnings call. To our viewers, thank you for listening today. If you do have additional questions, or if we did not get to your question, please email us at ir@fansunite.com. Again, that's ir@fansunite.com. Thank you, Scott Burton, CEO of FansUnite, and Graham Moore, CFO of FansUnite, for attending the call today and taking us through the quarter and the year.
All right. Thank you.